The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 17th of May. This is at 8 o'clock. It was 8:06 edition. It'll be replayed at 10. It'll be interesting to see where the Dow is at 10:06, because right now the Dow futures are just up a tad, up 4. We made an all-time high, and it's going to be interesting. Look, an all-time high, leg C. In the Chapman Wave methodology, we're always looking for, at least in a buy mode, which this is in, we're always looking, let me slide this across, for at least 4 higher peaks to confirm a buy signal to a buy mode. At that point, it can go higher. That's the D. Look, there's a D on the left side at 40,358 in the Dow futures, and we dropped very sharply down to the 37,500 level. Now we've come all the way back, and I just wanted to see something here. I didn't check that out. 40,191. Isn't that interesting? So does this get smoothed out? 40,358. No, the Dow futures have not made an all-time high, but the Dow itself, all-time high, 40,051. Now, there's a very good chance when you get to millennium levels, that's 1,000 points. The Dow tends to either go right through them or stall at that level. When it gets to the 5,000, 10,000, 15,000, 20,000, etc., that's a little different. So at 40,000 at an all-time high, I would not be surprised if this 40,000 level becomes a little bit of a barrier. And until we're really trading in the 40,350 to 40,450 area, to push away from that 4,000 and do it consistently over a period of a week and a half, I'm looking at that as a little bit of a barrier. Doesn't mean to say we can't go above it. I'm just saying it's like a little magnet line. So what we're looking at is the Dow futures are actually at this particular point, here we go, at 8:08 in the morning, up 13. The S&P futures are up 2.25 at 5,322. They did make an all-time high yesterday in leg C. Now that's interesting. Look, leg C in the futures, but a leg E already in the S&P cash. The price has gone above the left side high. So this weekly chart now on a this is on a peak count in the Chapman Wave basis. You've got peak A, peak B, peak C. And this has gone to a D. In the S&P futures, in the weekly chart, that's different. You've gone to an E. So this right side of this cup formation in the weekly chart, that's going to be a whole new thing coming up. And you've got already a leg D in the monthly chart. What did I just say? Objective is to always get you to a D. If there's a buy signal, upgrade it to a buy mode. Great. Now let's go to the NQ, which is the E-mini. Let me just move this to the right. E-mini, there we go. NASDAQ 100 continuous contract, leg D. It's still a leg D because you have to wait another bar to see if it doesn't take out the high of yesterday. And the weekly charts squeaked to a new high. So that means that the E-mini NASDAQ futures have already gotten to a D. Ooh, this is just so exciting. There we go, D, right? Objective is to get to a D, and that's where other things can happen. But I'm anticipating, because the Dow has made a peak C, a leg C, and we're waiting to see if today there's no new high above yesterday's high of 40,051. If there is, it just continues leg C. So let me just put this as succinctly as possible. If there is to be a peak D, at least a peak D, that can't happen. Let's just say today is no new high and it goes to a peak C. That means you have to wait for Monday, Tuesday, Wednesday to start a new leg D. Then you have to wait for a peak D. So that can happen next week. It can't happen sooner than next week. That's important. Okay. And I'm using the Dow as the benchmark. Why? The MACD is good. The relative strength, the gray line over there is very strong. The 9 is way over the 14, 9-period moving average. The stochastic's flat at 94. You love that if you're in a buy mode and you're long, which we are. The on-balance volume has just dipped a little bit with the price, but it's not a big deal. It was a tad overbought. Now it's just pulling back a little bit. And now let's go to the IWM. And this is going to be one of the big clues going into the end of May, beginning of June. Are we going to see the iShares, the Russell 2000 small caps, become viable rather than vulnerable? And from the way it's looking right now, I still can't say, even though we are long, I'm waiting to see how we tackle, if we tackle the 211.88 high of the 28th of March. Now, I want to get all this done because at 8:30 we get a new economic report, and that economic report, I think it's going to be quite important in telling us what happened there. Doing the show at the same time as other things is not a good idea. All right, in telling us whether or not there's going to be a rotation come this after any pullback in the market that holds true for the iShares Russell 2000 ETF to have built up momentum, as you can see here in the monthly chart and in the weekly chart, but momentum that can carry through so that it becomes, I wouldn't say a leader in the sense that, when you've got a bull market, the usual crowd, the NVIDIAs, those are all important. But what we're looking at is if there's a rotation, let's just say that we start to get a bit of a pullback in the really big caps, that's especially the tech sector. Will money flow into the small caps? And that's really the question. And I'll just tell you right now that if at any point the IWM is at 207.70, down 23 cents, if it starts to trade under 198 in the next 2 weeks, I think that's a stalling pattern. But at this particular point, I'm a little upset that it didn't take out 211.88 like the others have taken out their left side highs. Let's just look at the RTY, which is the futures. Futures right now are down 5 at 2,099. That's extending to a lower low than yesterday after that peak E. Well, I'm watching this. If you look at the weekly chart, that's just a nice look. The green 9-period moving average held above the 14. That's great. Okay, now I need to go to SMHs real quickly. SMH right now is down 58 cents at 231.52. What was it? Applied Materials, was it? Had a lousy, not too bad. It's down 263 at 211.40. 211.40. Wasn't that the price of the IWM, the last high? All right. So what we're looking at is still leg E, and it did make a new all-time high. So that's gone to potential D right there. All right. This is going to be very interesting, to say the least. All right, let's go to gold. Gold is up 7, holding very nicely. It's at a leg C. I think it's going to go to a peak C. But if you get to a D underneath the previous high, that usually says that's not very great. That's not a very strong move to the upside, but it is a cup formation, and it's a slow-moving formation. It is a peak D in the weekly chart. I like the action of gold right now. Let's see what silver's doing as we go to our first break. Silver's doing very nicely. It's up 12 cents at 30.00. I'll be right back. Basil Chapman, early edition of the Tiger King.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back, and this is Basil Chapman, early edition of the Tiger Conditions Hour. Look at silver, a nice cup formation, moving to a inside chap wave, inside wedge target. Resistance line, it went right there 2 days ago, and yesterday touched that line. So far today it's a little bit under it, but it's still up 14 cents, acting very, very well. Very nice chart pattern in silver. Let's go to high-grade copper. High-grade copper rallying some today, up 0.09 at 4.97 in the continuous contract. It did make a G/C in the daily chart. All the technicals are very good, except the stochastic has started to pull back. It's under 80% at 72%, so that must be monitored, but everything else is very strong. Leg D in the weekly chart, copper is fantastic. This is really quite a move, and it's really important worldwide for the economies. Let me just show you something. This is the Vanguard Total Return, Total World Stock ETF at an all-time high. This is the world. I mean, we hear about what's going on around the world and all that stuff. Well, this is saying, ho-hum, I'm doing very well, thank you. It's trading at 112.17. That was yesterday's close. In leg E, I have to call this an F at this particular point in the weekly chart, and only a C in the monthly. That means it's going to go to higher highs. So that's the world. So key support is 112. I would say that over the next 3 weeks, if there's a slide, the 110, maybe to 109 area should be very strong support. Now let's go back. We were looking at gold. The GDX is really what you want to be looking at. GDX, right there it is. GDX. Oh, I want to do this before we go to the next break, because then you get the economic report at 8:30. That's going to be very exciting, and I want to do that just before we get there. I want to show the futures. So the GDX made a peak C. I think there could be a little pop to a leg D. And then I think all the indices are going to have to be monitored closely. But look, finally, we're so close. This is the second monthly bar that actually has touched the Chapman Wave inside track repellent zone. So a pop into the 36.80, 37, 35-ish area on a weekly close would really make a difference to the monthly chart. So this is going to be something to watch. That's the GDX. Okay, I needed to get to bonds. I'm looking at bonds now, but in the next 11 minutes, anything can happen. Here they are down 11, 30 seconds, having made a leg D, beautiful cup formation, nice plumb line in the middle there, number of bars on the left to what I chose as the cup high, to where we went to yesterday and where we 2 days ago and yesterday, says that we've snuck above that resistance area. Now we have to try to get to 119.15, because 119, that's 119 and 5:30 seconds, so that the 119 and 18:30 seconds 200 period moving average can be touched for the first time in since March, where it was up at the 121s. I mean, these are bonds. It actually looks like a stock chart, right? So this is going to be very important. Do yields come down from whatever the news is coming out at 8:30, or we're watching those yields closely, because the yields, the TBT shows you the yield, and it's pulled back right to the 200 period moving average. Does it go further down, or is this going to be a bounce off area? Very important. Okay, dollar, DXY. The dollar right now is up 23 cents at 104.73. I'd say that on the making lower lows and lower highs, there's a real good chance it would test the 104.23 level, which is the 200 period moving average. From here, it's going to be very important to see what the dollar does. But so far, it's arched over. It's been making lower highs and lower lows. What happens next is important. And there's a chance that I can call this a peak C1, C2, and therefore even the weekly chart could go into a sell signal. It isn't close yet. It'll have to drop into the 103.20 area for that to happen, probably. All right, that's that. I want to look at the USD JPY. That is the yen, dollar yen, having a nice bounce off the low. This is what the dollar might do. We'll see what happens. Well, we're watching it very closely. And more important is the EUR USD, because that kind of goes with the gold. And there it is at a peak D. Isn't that interesting? At a peak D right now. So that is yesterday, right? 17th. No, that's today. Oh, dropped quite sharply. But at the 100, it's at 1.08. It's just down 0.002. I'm watching this because if it breaks into the 1.09 area, then all of a sudden the 1.097 200 period moving average in the weekly becomes a target. That'll help gold, and that'll probably help the general market. All right. So now let me do this as we go into, there we go. I want to go to this particular chart here. Oops, gosh. Oh, it's this little mouse that I'm using. That is, what did I do? I've never had that happen before. I could grab the outside, calm down, pull across, no problem. You've got it right there. Let's go to that. Now we can enlarge it. There we go. Nice and easy. Expand a little bit to the outside. There we go. Okay. Okay. What we're looking at here is the E-mini. So the E-mini's been chopping around. I was waiting for a leg D in the 10-minute chart. We've got a peak D at about 2 this morning. And now we've got another leg D right in the rectangles. And it's amazing how these rectangle formations can contain the price. Just look at this. I'll stretch it out. Here we go. Look at that. It looks fantastic like that, doesn't it? But as you stretch it out, it doesn't look fantastic. Here's your narrow range. I mentioned this yesterday. For those of you who trade the futures, remember that a narrow trading band can last a long time. This is from yesterday at 4 o'clock. You were stuck in a 315, about 315 to 324 range. That's a 10-point range throughout the night when we were trading 20 points, 30 points. This is amazing, right? And you've got your peak E pull back, a peak D pull back, and a leg D right now. And that's all within this tiny little range. Very interesting. So the breakout now is going to be very important. Why? Because if the E-mini at 53.22, if there's any news that has it, sometimes you get this spike to the downside and then it rallies sharply up, or you get the spike to the upside. Lately, it's been the spike to the downside, then an assessment of the economic news, and whoosh to the upside. Well, the whoosh to the upside says that at 8:30 comes out the news. At 8:50, if the futures are up over the 5335 area, going into this particular candle right here, that was at just after, right on 4 o'clock, where it went from 533 0.25 down to 5318.75, and then went lower. If it can get back into halfway of this candle, which is, and hold there. Now, I'm going to say, in this case, I'd like it to hold for about 3 to 5 minutes. That is 53.27. That's going to be a big positive. If it slides and for whatever reason it takes out and holds underneath the low that was made at 4:40 a.m. this morning, under 53.13, and it stays that way, that says we're going to have to wait. And the deeper it goes down now, the harder it's going to be to make that leg D. And I'll talk about that when we get back, because I think there might be a rotation to the upside over the next few days. We might just make that high in the Dow D, and then we might see some kind of a pullback. And just some, I'm not saying a smashing, I'm just saying some kind of consolidation. I'll be back in a minute, and we'll have that report out. I don't know what it'll be, but we'll watch the action of the S&P.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks, we're back, and Marcus in the den just told me that there is no economic report at 8:30 today. It's going to be at 10 a.m. LEI, and the Fed Wallace speaking at 10:15. Well, there it is. So good. I prefer that right now. I don't have to be watching some wild action. But in the meantime, that makes us even more important that the market is trying to rally. The Dow is only up 22, the Dow futures. E-minis up 350, not a big deal. Maybe they're waiting like I am for 8:30, but it didn't come. so far. All right, so that would have been exciting to see what the reaction is. Look, here we are still. Actually, this is an even more fascinating. Look at this chart. You've got yourself slightly rising and a slight, so there's an expanded wedge formation. And there are books and books and books with this type of pattern. My experience has been that it's just interesting. What happens is I would prefer to say that that's your resistance line right there. And we'll see what happens over the next 20 minutes or so. And if you break to the upside, that's important. But it doesn't mean, there's a whole thing. I mean, I once drew it in for someone who called me back in 2012, maybe, saying, anyway, there was some point where someone had called me and said, oh, that expanding wedge formation, when this is all over, watch that downside, watch that trend line. It actually didn't happen. The price went up and went up and went up, and that's it. This just disappeared. What I like to do is just treat one thing at a time. It's the upside action that we're monitoring, not the downside right now. If you're going up, making higher highs and higher lows. So look at this. Isn't it fascinating? Here's the 1 minute chart. Look how difficult it is right now to break above that. It could suddenly spike, but it hasn't done it yet. And there is trying. And does it change this notation right here? If it does, that would be very interesting. All right, let's get back to that. There's so much to talk about. So the euro hasn't had any effect right now. Let's see if gold has had any effect at all. It's up 8 points. Very nice. Just doing a very good job. Okay. I wanted to talk about a few things that I consider to be important right now. For instance, did I write it down here or did I write it down in my newsletter? Let me just see. Okay, here it comes. MKTX. I used to follow this. Someone in the den, I'm sure, will remember. I used to follow this all the time in my newsletter. We actually had it at some point, and then we didn't have it, but I just used it as an indicator. MKTX, I used to consider it a really good bond indicator. This is the Market Access Holdings, Inc. platform for fixed assets. And then it just disappeared as really a function, a tool that I could use. So I left it alone. But look at this, how it ran up. I wonder if I could do that. Let me just do this, maybe it'll work. TLT. So look at the TLT, how it ran up to March of 2020 to 179.70. This is the iShares 20-year Treasury Bond ETF. MKTX. I used to have this all notated. I just picked it up the other day, and I found some of the notation. I haven't updated it. That went to a high a little later. It went to a high in November of 2020 at 606.45, and then it came down. Doesn't this look very much like the bonds? Now, this moving average here that I put in very faintly, I just want to double check that I'm not speaking out of turn. Yeah, it's the 200. I made it very faint because the monthly chart, it's not quite as important. You have to wait a long time for it to become important. So you see how the MKTX market access platform has rallied here. Now look at the TLT on the left side. See how it's rallied. So I think I'm going to keep it on my list only as something to monitor. I don't know about trading it or anything like that, but it's kind of important because I used it and it was just a great barometer more than anything else of what was happening in the bond market and basically to yields. So I wanted to mention that. The next thing I wanted to mention is I showed this yesterday, or did I show it last night? Well, I did my overview for my subscribers because I won't be here away for the week. I'll try to do a show or two next week, but I will definitely do my newsletter almost every day. So AZEK company does outdoor living products and decking. We don't have any position. I'm monitoring it as a tell, just as I use Builder. You remember the Builder's resource? So now what we've got here is outdoor living products. Look at this beautiful, from the plumb line, from the high of 51.52, May of 2021, 3 years ago. It comes down to a November 2022 low of 15.12. What a hit. But look at this magnificent. Oh, and I never put the up sign. I must have it. It's just hidden. All right, I'll put it back. Chapman wave, 2-bar reversal at the low, meaning that it turns around with just a fractional, sometimes parallel, but sometimes just a fractional difference between the low and the high, and it turns around. And what does it do? That was a peak C minus because it failed. This is a peak C right now at 50.78. So this is it's quite a phenomenon that in the market, I have these patterns that I talk about all the time, try to keep them in mind for all the trades, all the positions, anything that I'm doing, where the price goes straight line up, straight line down, 1, cup formation 2, arch formation 3, and a mix of 1 and 2 and 1 and 3. Look, here's 1 and 3, the dreaded H if you take out the left side low. And then on the right, you've got the cup for the reverse Y. If you take out the left side high, that's really important. But what's important also is the work that I've done on this particular pattern. Now, I should have it somewhere. Maybe I'll show it sometime. But the number of bars on the left in this arch formation can match from a plumb line exactly to the penny sometimes, or to the day, to the bar, the number of bars to the downside. When that happens, it's awesome. It's just like a mathematical formula. But most of the time, you have to find the plumb line because you have to use other technical tools. In this case, there was no finding anything. It went from this high in the same number of bars to that low and back again to within, 50 cents or so? Unbelievable, isn't that? And this is over a period of 3 years. Isn't that quite amazing? How does the chart know to do that? Anyway, so I'm monitoring this because this is now the outdoor season. Will they see really good product buy? But it has decking and all sorts of things like that, but it does outdoor living products. Anyway, I'm watching it very closely because if it can make the cup formation in the weekly chart, meaning that by, let's give it a parallel, let's just say by the end of June, beginning of July, it's come back to the 50.78 level, that'll be really interesting. Okay. So that's that. And the reason why I wanted to mention it is if you look at the, where did it just go? ITB, there it is. ITB, don't tell me I haven't got my notations here. Now, peak D in the monthly chart. I want to finish this because this is the iShares US Home Build. And, how is it?
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So in the final segment of today's show, and that's an early edition show, before 9 o'clock, I will try to give a little summation of what I'm looking at into kind of after midday. So in the meantime, what I want to show you is, look, the question came up about Apple. Excuse me. Apple's in a leg D, right here, under the all-time high, but in a leg D in the daily chart. Did have a round number 187. It's now looking back and saying, hey, I'm at 189.94, up 10 cents. I'm doing very nicely, thank you. And the Chapman wave falling axe formation, this declining cone, we went above it. It's a Friday. At 4 o'clock, we'll see if it closes above 187.80. Otherwise, it goes back into that trend line. So that's good. Amazon was weak yesterday and then came back a little bit, but it still went under the 14-period moving average. This is like a little mini Chapman wave Roman candle. I usually use this just as a kind of a, if it's a very long candle that looks like this with a body that's halfway from either the top or the bottom with a long leg, that's one thing. This is almost in proportion, but I'm just going to say, if today Apple can trade at 186.50, it's at 184.16 right now, for about even 10 minutes, there's a good chance to try to tackle yesterday's high. But actually, it's more in a consolidation pattern than anything else. Not breaking down, but not really breaking up the way Apple usually does. It's acting very well. It's just holding beautifully here. It's made an all-time high. 188.65 was the high in July of 2021, down to 81. And it's come all the way back to this 191.70 level. So these patterns are formidable. I mean, look at this. We're talking about, I'm going to go to the, what should I do? Is it the, I'll go to the Dow for now. This is pre-market. That's yesterday's close. You see the speed with which we went from a leg C to a huge, this is a big candle in April. And all of a sudden in May, it's not just a good candle, but we didn't take out April's low, and we went to a higher high. That C to D is a good sign, but look at this, S&P. Look at that. That did the same thing. The only thing is, the Chapman wave lettering is that was a D in March. April was lower high and much lower low. May is a higher low and a higher high, but that's D to E. So I put a circle around it because this is a classic Chapman wave. The speed with which you go within 3 bars from a peak D to a new leg E, if it does it within 3 bars, I call that the potential for a Chapman wave instant restart. That's completely negated if there is a close under the low of, in this case, so the S&P 49.53.56 in the next month or two. All right? So with that said, if it's an instant restart, we shouldn't take out that low, and we should make higher highs. And it can go all the way to 4 higher highs. If there's an instant, I don't even want to. All I'm saying is that I've had so many of these instant restarts that have turned out to be really good. And look, yeah, in the monthly, you would think, oh man, it's such a longer term situation. Is that even possible? Absolutely, it's possible. I'm trying to find one here. Okay, of course I wouldn't find one. I've got so many, but I don't one here in the S&P. This is the Chapman stalk leg formation. I don't want to get into that right now, but this is very good action. Look, MACD. This is a monthly chart. MACD is strong. Stochastics flat at 94%. You know that what happens is after holding flat for a long time, like this, being very bullish in the 90%, especially 95% plus area, it can go for quite a while. When it does break under 80%, watch out. You can get a very sharp decline. Well, that would also imply that if that's the case, this green 9-period moving average in the S&P will go under the 14-period moving average, which is now at 4743, and you see the price somewhere in the 4480 area for the S&P. I don't see anything on the horizon at this particular point to even consider that. Let's go one step at a time. The one step says in the falling axe formation in the weekly chart, you've broken nicely above it, and that's it. This whole area here where we were just 4 weeks ago of the 5100 area, I'd say 5120 to 5050. As support in the on any big weakness coming up, if there is, for the next, say, May. Who knows? Selling may go away. I don't know. That's not been true for a long time. It's just an expression. But I'm just saying, I'm watching this very closely because more people. If you had to, I'm just doing this by instinct, having been in the markets for forever. My sense is that. My sense is that the action that we're looking at now, especially the persistence after all the negativity, just everything that's going on, has more and more people coming into the market, and you can see that by the IAI. That's moving very nicely. You can see that by Schwab. I should mention we're still along the IAI. From Schwab at 78.04, making an all-time high, making a yearly high. All-time high is 96.24. There's a long way to go. So I suspect that in 2024, if what I'm anticipating is correct, you will see Charles Schwab getting closer to the 90 level at some point, maybe a little later this summer. I don't know, but that's the way the chart looks. And that just says to me that major kind of crash scenario, just at this time, I don't really see anything on the horizon to suggest that. And if you look at what would happen is usually it's the banks. Well, look at the banks. The banks, the XLF, went, look, 42.22 was the all-time high. 41.70, oh, here's another one. 41.70 for the S&P Select Financial Spider Fund back in January of 2022. Goes down to 29.59 in October of 2022. So it's a little lopsided. I use this as my plumb line, that peak right there back in early 2023. And lo and behold, with the Chapman Wave inside wedge target repellent line, it went right there and it's sitting there. And here it is at an all-time high. But wait a minute, that should be B at 42.22, 42.20, makes peak B. We're already in leg C. But it's acting so well. And usually big crises sees the financials, something happens with the banks, whatever it is. But we don't see that right now. So far, very good cup formation, Chapman Wave inside wedge target repellent line. Look at this. We've almost got, let me do that parallel right there. Look at that. Isn't that nice? This is the financials. That's the reason why we're still holding a Bank of America as a laggard that should play catch-up. Here we are. Look at that beautiful support in the weekly chart for the XLF. And it's only a leg C so far in the daily chart. Let's look at KRES. This is the regionals. Are they catching up? I would say they're doing well for the first time, but not great. Absolutely, they're fading in the monthly. I'll be back. That's the regional. I'll be back in the month. Basil Chapman at 8:50 a.m. Eastern Time.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Folks, we are back, and I'm just typing into the Dan. Someone said, wow, Applied Materials shook off early overnight weakness after reporting. So, yeah, I agree. And that's why the semiconductors, the SMHs, are so important. So let me just do this. I wanted to show you the E-mini right now. Peak E in the 1-minute chart, peak G/B in the 5-minute chart. But look at the 9-period moving average in the 10-minute. It's taking you from a low of the 53 10-ish area, and it's gone all the way to 53.24.75 right now in leg D. And look at that green 9-period moving average. The longer it holds above the black moving average, the longer this can rally. So let me just sum this up. I am looking at a chance. I don't know what's going to happen with the 10 o'clock report or the 10:15 Fed speaker. All I can say is, watching very closely, I'll go to the YM, that's the futures right now. The YM trading up 80. Now I'm going to go to the Dow itself, cash. I'm just saying to you that if there is a move today above 40,051, it extends leg C. You cannot get a peak D until at earliest Wednesday of next week, because you still have to make a lower high. That'll be, say, Monday, and then a higher for a leg D on Tuesday, and then a peak on Wednesday. If there's no new high above 40,051 today in the Dow, that makes it a peak C. Then you'll see a leg D, and then we're going to start to look to see what's going to happen. But SMHs, they are so important. They're at 233.25. 239.14 was the high, and that'll make a leg D in the monthly chart if we can get above 239.14 today or Monday. And they're acting quite well at this particular point. What's NVIDIA? Remember, I had a whole thing with the round numbers. It made this 974.00 high. It made on the low of the 19th, it made a round number close of 762. Here it is, it's 943, trying to get back. I don't know if we can get back there. That's what we're going to be monitoring. So far, there's nothing here that says negativity. Even the bonds, down 34 cents in the TLT, but it's leg D, it's still acting quite well. All I'm saying is that I anticipate that I'll get a lot more information next week, and that's going to be really important in terms of saying to continue into May going higher, or do you have a consolidation starting sometime next week? Have a wonderful rest of the day, and stay tuned. Let's see, with 9 o'clock, it's Tommy's show.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tiger's Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
Steve Rhodes